from Kansas State University, this is Agriculture Today. Eric Atkinson with you. And coming up today, K-State's Dan O'Brien with his weekly comments on the grain market trends. Among other things that Dan discusses today, the signing of that U.S. China Phase 1 trade agreement and whether yesterday's decidedly negative grain futures market reaction was excessive or not. Following then, K-State's Reid and Rich Llewlyn advising new crop producers to start finalizing those decisions on which USDA farm program option you'll enroll in for 2019 and 20 production, ARC or PLC, during which they remind you about the helpful information at K-State's agmanager.info website. And checking in later, K-State's Mary Knapp on Kansas agricultural weather. Right here on Agriculture Today.
What is radon? Home exposure to radon gas is the leading cause of lung cancer death in the United States for non-smokers. In Kansas, 1 in 4 homes will test at or above the EPA action level. The Surgeon General recommends all homes be tested and fixed if necessary. Visit kansasradonprogram.org for more information. Test, fix, save a life. This message brought to you by the Kansas Radon Program, the Kansas Association of Broadcasters, and this station.
This is Agriculture Today, coming to you from the campus of Kansas State University. Welcome to our Friday edition. Well, it's been another intriguing week for the grain markets, loads of factors for the markets to respond to, and we'll cover as much of it as possible right here with our guest, Dan O'Brien, grain market economist, K-State Research and Extension. Of course, Dan, we will touch on that U.S. China trade deal, Phase 1, which was signed by both parties earlier in the week, and how the markets responded to that. First, though, back to last Friday's USDA grain supply and demand reports, and in particular on the grain production side, the numbers for 2019 row crops. One of the things that was put out right away was that the USDA will be resurveying producers in the northern Corn Belt and Plains region because of the hang-ups with harvest in those areas.
Yes, the snow depth is tangible up in there. You see through parts of South Dakota, snow depths from in the south, 4 inches of snow up to the northern parts, up to 12 and 13, and to the east, quite a bit of snow. Of course, North Dakota, even more, 20-some in certain locations, particularly in the southeast area, but literally the whole state, the whole eastern 2/3 of the state has significant snow to deal with. Minnesota, 14, 18 inches, etc., to the north, of course, but even heading down to the Iowa border, good parts of the northern half of Wisconsin, a fair amount of Michigan, all having snow cover. And when you look at the states that the USDA has said that, quote, someday, which will probably be in the spring, March, April, once they have a pretty good idea that the harvest is pretty well done, that they're going to re-interview farmers for corn acreage, final corn production in Michigan, Minnesota, North Dakota, South Dakota, Wisconsin, for soybeans, which were, again, a little bit further ahead than for corn in Michigan, North Dakota, and Wisconsin. They also stated that in that report that as of December 1st, for 2019, 8% of acres had not been harvested for soybeans, about 2%, and some just a little bit under 1% for sorghum. It's an inexact science because they didn't give that percent across all the various states. Of course, the worst is in North Dakota and parts of South Dakota, as states we mentioned. But 8% of the U.S. corn crop is somewhere in the vicinity of 800 million to 1 billion bushels. So when the USDA came out with a 13.7 billion bushel production estimate, 1 billion of that, probably or a little bit less, is not harvested yet. So big issue. And the even the soybean number, 2% of the U.S. soybean crop being unharvested right now is somewhere akin to about 50 to 75 million bushels. And at a 3.5 billion bushel crop, that's not any small potatoes. So we have data still to come out, but I think that in looking at the response of the grain market overall to this, particularly on the futures, I don't know that there'll be a lot of concern about that yet until those numbers perhaps come out, and if they show a surprise, whatever. But all the more, though, I think we've probably shifted our attention over to usage issues, new crop planting, and along with the usage, concerns, questions about when Phase 1 of the U.S. China trade agreement might kick in and actually help exports for both corn and soybeans.
Now, noteworthy, the USDA put out its projections on winter wheat acreage as part of those overall reports, and the number was down again, and Kansas was right in the thick of that.
USDA projected hard red winter wheat seedings down 3% from a year ago. So that continues a trend in these states towards hard red winter wheat being challenged. Now, that doesn't mean that production's automatically going to be down. If we have good yields and hopefully with good quality, if those things can go together and not work against each other, supply could be just fine. But with that report that's basically showing a continuation of a downward trend, would not be surprised that that number in particular gets looked at as we go forward and look at further acreage, state-by-state acreage numbers heading off into the future. Again, we have what's planted. How much are we going to get harvested is probably as big an issue.
And you did touch upon this. Is the market now starting to speculate on spring planting acreage, given the numbers that are now semi-firmed up for 2019 production?
They are, and there's not really a consensus other than, if there's a consensus, it's that whatever acres were not planted in accordance with all the excess moisture we had in the spring of last year, 2019, that there'll be at least an effort to hopefully plant up to what farmers would look at as normal. So there'll be sizable increases in soybean production, no doubt, if we can get the crop back in and we don't have a short yield. And if anything, there had been through the winter months a lot of discussion about corn acres moving sharply higher. I guess as an effort to look at that, we've been looking at forward contract prices relative to our cost estimates, and really for almost all of our crops. Well, for all of our crops, we're seeing in our localized regions that we've been having meetings in basically and talking to farmers at, and we pull up our cost of production numbers. Our forward contract bids are doing a great job of covering all costs except land for all commodities, and pretty close to covering full costs with a cash rent involved for wheat, but clearly covering full cost for corn, for soybeans, and for grain sorghum especially. So, we've got forward contract bids now that seem quite profitable, but yet for the 2020 crops that are yet to be planted, we're how many months away from actually putting any seed in the ground. So that's the conundrum of the whole thing, and that, we've got pretty good forward contract bids right now, but still a whole bunch of uncertainty. And for wheat, again, we have had strength of late. Yesterday we were down on the market, but I think some of the recent down that has happened in the last couple of days has been both the euphoria of signing a trade agreement and then the knee-jerk reaction to the downside that, gosh, there's not sales right now happening. So I guess we're seeing the market go through an adjustment to try to figure out what reasonable expectations are for activity. And we'll have to probably see some U.S. grain export business come to the fore as a result of some of these trade agreements before we see the futures market move to the high side. One thing that's also becoming apparent is that, again, the futures have been, as they're focusing on these larger issues, and in most cases interpreting things pretty conservatively, if not downright pessimistically, grain basis in a lot of areas of Kansas for corn, wheat, and increasingly now for soybeans, really looking pretty good. So it just brings up the point, what's the real market price that people pay attention to? Well, for farmers in a local area, it's futures minus basis. It's the cash price. So the futures are certainly important, but it is thought-provoking to see how strong we have local basis levels being now in a lot of areas of Kansas and around the U.S., giving a different picture taken into account along with the futures than just the futures alone.
Before we call it good for this week's visit, though, back to what were the headline makers this past week, the trade deals. China and the USMCA agreements, the China Phase 1 deal signed and the Senate passing the U.S.-Mexico-Canada trade agreement, and it's expected to be signed by the president, of course. We won't have time to talk USMCA, but the market's immediate reaction to the Phase 1 China deal had a lot to do with the fine print, Dan, and some concerns about China having much more leeway in the amounts of grain that it can buy and win as part of that agreement. But do you think that's just a short-term response to the trade agreement?
I have a couple of responses, and you hope that they're informed. The first would be there was a commitment to buy X amount within a 1-year period, and there was a statement on the part of the Chinese that they'll look at market forces and they'll make the most economical choices that they can to buy grains at a reasonable amount. So here they've made a commitment. Sometime they're going to buy, and in the first day or so, some of our markets have dropped off precipitously. Mm-hmm. In a way, that's probably giving them a buying opportunity. So we'll see how it works out, but there is the commitment there. And the other thing I think to be aware of is that, yes, there still are tariffs there, but if you read what the text of the trade deal says, it says the United States will cut by half the tariff rate it imposed on September 1, 2019 on Chinese goods down to 7.5%. So, yes, there are still tariffs, but they've been cut in half. And the stated purpose of retaining tariffs is so, as the U.S. and China still have issues to iron out, there's still an incentive to bring both parties to the table. Mm-hmm. So I think we have to be careful in how we present these issues as all or none issues. And I'm not trying to sound political on that, but I think objectively speaking, it's not an all or none thing. It's still the hope that there would be more progress made as we go from the Phase 1 agreement off into more fundamental agreements down the road.
Dan, thanks as always for taking the time, and next Friday we'll catch up with you again.
Thanks, Eric. Take care.
Dan O'Brien, he's a grain market economist, K-State Research and Extension, and we'll be back here on the K-State Radio Network. Agricultural producers, landowners, and creditors, you have a partner in your legal and financial needs. Kansas Agricultural Mediation Services offers reliable, trusted information and guidance. Whether you need advice for ag credit concerns or are transitioning your operation to the next owner, Kansas Agricultural Mediation Services can assist you in making sound decisions for your business. To learn more, call 800-321-3276 or visit us online. Agriculture Today continues now here on the K-State Radio Network. You crop producers, if you haven't taken care of this already, have an important responsibility to your operations coming up quite soon, as you'll be signing up for the USDA program options of choice, the agricultural risk coverage option or the price loss coverage option. Joining us now from the Agricultural Economics Department at K-State, Reid and Rich Llewlyn, and they're going to talk of the importance of thinking about this right now, as well as the wealth of K-State resources that can help you make the decision that fits your operation. So, Robin, there's a timeline involved here. We'll start with you and remind producers about it.
Yes, we actually started being able to make this decision on September 15th last fall, and then October 15th for the second year of the decision. But I think a lot of producers have been kind of waiting and knowing as we get towards the end here, they'll have better information to make that decision. But I think now we are kind of in that threshold where we have about as much information as we're going to get to help make an informed decision. So producers have between now and March 16th to go in and make their election enrollment with their local FSA office. So I would say now's the time to make that appointment and get going on making that decision.
And K-State has pulled together information to help with that. We'll bring in Rich in just a second to talk of that. But getting this done before the 11th hour is fairly important here, right?
Yeah, I would say you want to spend some time looking at the numbers specifically for your operation to make this decision. And And we have what we're calling the trade-off spreadsheet on our website at agmanager.info under the policy section in 2018 Farm Bill. And what this does, you can put in your farm's own program yield, so that's the established yield with the Farm Service Agency, and then based on a range of price projections, you can see what the PLC payments for your farm would be or the ARC County payments, and that, again, going off the county yield and the national price. But you can look at that table and see, based on the prices and the yields, what your ARC County payment would be. So I think that's a very invaluable tool to really make this decision, and especially going forward when it turns into a one-year decision. I think this is probably the piece of information that will really easily be able to show you the picture of the decision.
And as far as producers looking back on their previous commitments under the program, why there may be just cause to look a different direction for some producers, right?
I think enough things have changed with this Farm Bill that we can't just look back and say, well, what we should have done last time, I'm going to do this next time. Because obviously we have markets that are fluctuating right now. We have price projections out there, but a lot of things could happen between now and when we actually receive these payments, when the marketing year ends. So it's a different picture than it was 5 years ago. And, PLC program's pretty much the same it was before. There's been some changes in the ARC County program, adding the trend adjustment to the yield guarantee, switching to the use of the RMA data. That has changed the program enough that you want to kind of look at what those projections are and what your payment might be.
All right. Well, Rich, fill us in fully on what's out there on the agmanager.info website that can help producers sort through it all, if you will.
Well, in addition to that trade-off spreadsheet that Robin talked about, we have quite a bit of information on projected and estimated prices, both for this current marketing year, which will provide payments for October of 2020, and also for the next marketing year, 2021. So the prices are important for both programs. For PLC, that's what determines the payment, is the marketing year average price, whether it is above or below the reference price. And if it's below the reference price, then there's a PLC payment for that. So we have several sources of these estimates. K-State has their own estimates, but we also have some USDA sources. And then at the University of Missouri, there's the FAPRI projections and estimates. So right now, we're kind of looking at wheat having a price that's projected to be fairly low relative to the reference price of $5.50. We're looking at $4.50 to $4.70 on the range there for this next year, and for the following year also the wheat price looks to be lower than the reference price. So PLC is looking fairly good for that, and for grain sorghum also. The projections that we have show the grain sorghum prices for this year and next to probably be lower than that reference price, meaning there will be PLC payments. For corn and soybeans, the prices are estimated to probably be at or above the reference price, so it may be unlikely for those two crops that will have PLC payments. For ARC, you also have to include what you expect the county yields to be, and of course we won't know anything for the following year, but for this current year, there is some information that's coming available. The RMA estimates that are going to be used won't be available until later in the year, but the National Ag Statistics Service has provided some yields that will be available in February for some of those crops. But you probably don't want to wait for that. You probably should have an idea of what the yields in your county were, and you can kind of use that then.
That is more or less the point here. There's enough information in hand to make a strategic decision that will more than likely be the one that you actually want to settle on.
That's right. The price information, especially for wheat, is getting pretty well set for this first year of the program, and we're getting a pretty good idea of the prices for the summer crops as well. We've had several months of the marketing year already happen, and a lot of the sales have already taken place. So there's a lot of price information out there, and producers should be able to maybe from their insurance agent get an idea of what the county yields might be.
So producers, you might get on agmanager.info, start sorting through all of this if you haven't already. And Robin, there is so much new in the programs one facet of which would be the flexibility. Producers can think longer term here and remember that they can make a change in their program status year by year from here forward, right?
Yeah, so that's also the big change going from the last Farm Bill to this one. Last time we were making a 5-year decision. You could reallocate base acres, update your program yields. It was like decision overload trying to decide last Farm Bill how you were going to manage this thing. This time it's a lot more straightforward. We're making a 2-year decision right now. So the first payment would be on the crop we harvested last year, but that payment will be received in October of this year. And then we're also locked in for the crop that we harvest this year will be under that same decision process that will receive that payment in October 2021. But after this, we'll be making a yearly decision. So likely next fall and early spring, we'll be making the decision for our 2021 crop. And then every year after that, the same time frame. I will mention we have a lot of questions here on oat and barley and sunflower seed base too. There is not a reallocation option this time. So the base acres that you have are the ones that you're making the decision on going forward. There is a program yield update, however, and this won't take effect until the payment for October 2021. So you actually have till next fall to get that program yield update taken care of, although you can do it now as you're electing ARC PLC before March 16th.
You need to be as prepared as possible before you go into your Farm Service Agency office locally and make your commitment on the program participation. Any final advice for producers on this business?
Yeah, I'd just like to say we do have an office in all 105 counties across Kansas, and our extension agents there are fairly well versed about the Farm Bill, and a lot of them will be taking individual appointments to talk to producers about making their decision before they go into the Farm Service Agency office. So it wouldn't hurt to give your local office a call and chat with your extension agent, too, before you make this decision.
Excellent. And by all means, take full advantage of what's out there on the agmanager.info website, the information and the tools available so you can arrive at the most practical decision on farm program participation for ARC and PLC program participation specifically. And Robin and Rich, thank you for coming over, as always.
Thanks for having us.
Yep. Thank you, Eric.
Robin Reid and Rich Llewlyn from the Agricultural Economics Department here at Kansas State University. Here is the pathway to follow at the agmanager.info site. Once you go there, scroll through the photo illustrated options at the top of the page. You'll arrive at the one eventually that says 2018 Farm Bill. Click on that, and that'll lead you right to everything that Robin and Rich and colleagues have posted recently on the ARC PLC decision, including the marketing year average price outlooks that Rich cited, as well as that spreadsheet showing the trade-off between ARC and PLC that Robin described earlier. Also, you'll find historical ARC PLC payments by county, the effective reference price calculations for the 2019-20 marketing year, and frequently asked questions about the crop provisions of the 2018 Farm Bill. Please do take full advantage of all of this at agmanager.info. You're tuned in to Agriculture Today. Now this break, and then we'll return with today's agricultural news headlines. This week's edition of the Kansas Wheat Scoop, Marcia Boswell standing by with that, and K-State's Mary Knapp on Kansas agricultural weather here on the K-State Radio Network. Stay tuned.
Did you know every Kansas farmer feeds 128 plus people?
Kansas farmers are hard workers, dependable, authentic, and sensitive.
Not only do farmers put food on your table, but they put clothes on your back and fuel in your car.
For more information about Kansas farmers, visit K-State Research and Extension online or stop by your local extension office. This message has been brought to you by the K-State Animal Sciences Leadership Academy participants.
You're tuned in to the K-State Radio Network and Agriculture Today. Eric Atkinson with you once again. Thanks for joining us. Now to today's agricultural news headlines, courtesy in part of DTN. And, of course, topping the page, the U.S. Senate voting 89-10 yesterday for final passage of the U.S.-Mexico-Canada trade agreement, sending that agreement to President Trump to sign into law. Given that Mexico has already approved the trade deal, getting the pact into implementation will now fall to Canada's government to ratify the agreement. The USMCA is expected to boost national exports roughly $68 billion a year. That's according to an International Trade Commission report issued last spring. That same analysis projected agricultural exports would increase about $2.2 billion. While ag exports are only pegged to rise roughly 1.6%, some sectors benefit more than others, and agricultural supporters said what the trade deal provides is certainty. Now, among the major winners in the trade pact would be dairy producers who will receive more export opportunities into Canada's managed dairy market. The trade pact also requires Canada to remove the pricing class of dairy products that has further restricted U.S. dairy exports and had drawn the ire of both dairy producers and the president. Dairy exports are expected to increase by $314 million per year under the deal. Now, speaking to Bloomberg Television before the vote, Senator Mike Rounds of South Dakota talked about the changes in the trade deal that would require Canada to price U.S. wheat the same as Canadian wheat. Quoting Rounds, for producers in South Dakota, both spring wheat and winter wheat, this gives them the opportunity to compete with Canadian wheat producers on an equal basis, long time in coming, in Rounds' words. And the U.S. Meat Export Federation highlighted that USMCA locks up trade for two key red meat destinations and, quoting here, bolsters our position as a reliable supplier to two leading markets that account for about one-third of U.S. red meat exports. That according to the president and CEO of the Federation, Dan Hallstrom. He noted Mexico and Canada accounted for $3.8 billion in red meat sales last year, and that the U.S. red meat industry looks forward to many years of further growth of business. And ethanol groups also praised the deal. The Renewable Fuels Association pointing out that Mexico was the top market last year for distillers' grains and a top 10 market for ethanol. Canada, meanwhile, ranked second for ethanol exports and was a top 10 market for distillers' grains. Now, the USDA Secretary is looking forward to the future benefits for farmers and ranchers now that the USMCA deal has passed the Senate and will soon be signed into law. Here's more from the USDA's Rod Bain.
Agriculture Secretary Sonny Perdue is among those in the ag sector, eager for our nation's farm and food producers and businesses to reap the benefits of the U.S.-Mexico-Canada agreement. Those comments come in a statement after the U.S. Senate Thursday approved the deal. The Secretary says USMCA is a high-standard agreement that continues to build upon existing markets with our North American neighbors.
Chapter by chapter, verse by verse, line by line, this is an improved relationship for agriculture, but also in the over greater economy.
With key provisions for U.S. agriculture, including increased market access for commodities such as dairy and poultry and eggs, elimination of Canada's discriminatory wheat grading system, removal of technical trade barriers involving wine and spirits, and addressing specific issues related to ag biotechnology, geographic indications, and sanitary phytosanitary measures. I'm Rod Bain reporting for the U.S. Department of Agriculture in Washington, D.C.
Well, the wheat, corn, grain, sorghum, and soybean leadership here in the state of Kansas welcome all of you producers and others to a big event right here in Manhattan a week from today. Marcia Boswell has more on this week's Kansas Wheat Scoop. Marcia?
All Kansas farmers are invited to the Kansas Commodity Classic on Friday, January 24th, 2020. The Kansas Commodity Classic is the annual convention of Kansas's top crops, corn, wheat, grain, sorghum, and soybeans, and will take place at the K-State Alumni Center in Manhattan with registration and breakfast beginning at 7:30 a.m. Thanks to the generous support of the Kansas Corn, Wheat, Grain, Sorghum, and Soybean Associations and our sponsors, registration is free for farmers and friends. The morning session will open at 8:30 a.m. with welcome remarks. Lieutenant Governor Lynn Rogers will kick off the event with an update from the Kansas Governor's Office. John Felt, founder and president of Blue Water Outlook, will provide a weather outlook. Blue Water Outlook provides a wide variety of information to help provide informed decisions for water management. Blue Water Outlook is focused along two primary areas of emphasis: water resources insight and intelligence, and decision support services. Elected officials have been invited to give updates from Washington, including the Senate Ag Committee, a trade outlook, Farm Bill update, and other pertinent issues affecting Kansas farmers. Dr. Alan Gray, director of the Center for Food and Agricultural Business at Purdue University, will end the day with a presentation on capitalizing on the greatest sustainability story in history. He currently holds the position of Land O'Lakes Chair in Food and Agribusiness. Gray's research interests are agribusiness management, strategic planning, decision-making in uncertain environments, and simulation. He also works on the Large Commercial Producer Survey, conducted every 5 years by the Center, which explores the attitudes and buying behaviors of large commercial producers. The Kansas Commodity Classic is hosted by the Kansas Corn Growers Association, Kansas Association of Wheat Growers, Kansas Grain Sorghum Producers Association, and Kansas Soybean Association. Signature sponsors are Kansas Corn Commission, Kansas Soybean Commission, and Kansas Wheat Commission. Industry sponsors at the platinum level are Farm Credit Associations of Kansas and Kansas Department of Agriculture. Sponsors at the gold level are Ag Risk Solutions, Corteva, and Syngenta. Sponsors at the silver level are AgriGold, Fairbanks Scales and Pertinent Instruments, Hannibal Grain, Keiko Isom, KFB Health Plans, and Midland Genetics and Polanski Seed. Thanks to these generous sponsors, the January 24th event is free to attend and includes a complimentary breakfast and lunch. However, pre-registration is requested for food count purposes. Visit www.kansascommodityclassic.com to register. For Kansas Wheat, I'm Marcia Boswell.
All right, Marcia, many thanks. Well, today, weather-wise, is very much resembling last Friday's wintry mix in parts of Kansas anyway. We'll talk about it with K-State's Mary Knapp next on Agriculture Today.
Have you ever thought about where your food comes from? If you're thinking the grocery store, think again. Facts show that the American farmer feeds more than 129 people.
They are continually increasing and improving their operations. A wide variety of crops and livestock are grown in Kansas as well as the United States, providing food to your dinner plate.
Next time you see a farmer or rancher, thank them. For more information, contact K-State Research and Extension.
Next up for you on Agriculture Today, the latest word on Kansas agricultural weather out of the Weather Data Library here at K-State, where our guest is stationed as we speak, Mary Knapp, climatologist, K-State Research and Extension. She's over there in Throckmorton Hall because with the freezing rain and the subsequent ice we're experiencing here in Manhattan, getting around from point to point on our sidewalks and such is pretty dicey, so she has stayed put over there this morning, which is a good idea. First of all, looking back at this past week and roughly a week ago with the snow and ice that enveloped a fair part of Kansas, you have moisture totals that resulted from that storm.
We have some general numbers, and basically it was a very large split. Statewide, we did average above normal for the week, but the western third of the state fared poorly in the overall totals. They averaged only about 1/100th of an inch in each of the divisions. They did see some moisture, but not very much. In contrast, you get into the eastern areas and well above normal, some places almost 3 times what they would normally see during the week. Most of that came in the form of freezing rain, although there was a little bit of snow mixed in with that. Our biggest snow report was 4.5 inches of snow in the northern parts of the state. So again, winter precip temperatures, believe it or not, were pretty much above normal, although we had a very cold end to the period. January is trending warmer than normal for the first half of the month, but it looks like we're going to be in a slightly shifting pattern with winter still on the horizon.
As for the drought status, it sounds by what you said that there hasn't been much change in the haves and have-nots in Kansas then?
No, actually the drought status did not change at all during the week. We're still dealing with, out in western Kansas, some short-term moisture that ended December, and at this time of the year, they don't typically see much moisture, so there wasn't much cause for worsening of the drought conditions. What we'll be watching for the next week's drought monitor is how much do they manage to wring out of the system that is making its way across the state as we speak. They have seen some moisture out in southwest Kansas, so that's welcome. We'll see how much they manage to get out of it.
Now, this is a fast-moving system that we're experiencing at the moment. It'll be out of here relatively quickly.
It will. Basically, we're looking at it moving out by the end of the day today. Tomorrow is looking to be sunny and seasonal on the temperatures. It's not going to warm up a huge amount, but we will see temperatures get above the freezing mark, which will allow for most of this ice and snow to melt. But again, until probably midday today, we've got another hour or two before those temperatures rise above freezing. The biggest issue will be south of I-70, where more moisture is working in with the system, and so the ice coatings are going to be a little bit heavier.
In the interim, until things warm up enough to thaw these hazards out, we urge everyone, of course, to take all precautions. Well, what about this coming week, Mary? You say that we do have colder weather ahead?
Yes, when we look at the 6 to 10 and 8 to 14-day outlook, the pattern is for cooler than normal across most of the state. So we'll be, again, on the cold side of the pendulum, if you will. And it looks like there's going to be another chance of precipitation midweek next week. Tuesday, Wednesday, Thursday, Friday. It's kind of difficult to say just how quickly that front will move in and how rapid it will transition across the state, but it is in that outlook for the middle of the week.
The 8 to 14-day outlook takes us right through the rest of the month of January. It's suggesting more of the same of what we're going to see here in the immediate week or so?
Yes, it does look like the probabilities of wetter than normal conditions are not quite as strong as in the 6 to 10 day, but it is still tilting that way. Temperatures are shading towards a better chance of cooler than normal, so we may end the month on the cooler note than we began it.
All right. And you tell us that the outlook for the month of February has been posted now, and what's in store there?
Well, one of the most interesting aspects of the outlook is that there is an area of increased chances for below normal precipitation, but it's on the eastern side of the state rather than the western, basically hugging the Missouri border from southeast Kansas up into northeast Kansas. That it's not going to be nearly so concerning as a dry pattern in the west would be. Most of that eastern area is well saturated at this time. A dry period in February would lessen some of the concerns for flooding in the spring, and not eliminate it, but it would certainly be more favorable than having a wet February to set the stage for our spring season.
And the western part of the state, then, equal chances?
Equal chances for above or below normal. We'd hope for an onset of some of the normal spring moisture. We certainly don't need any drier weather out there We still have a large area of that region that is in severe drought, although we don't have any in extreme drought at this time. But again, temperatures have been warmer out there. Get some winds out there, that dries things off. And as we move into February and March, we would be expecting the winter wheat to start beginning to come out of dormancy and getting ready for the spring season. So some favorable moisture would be welcome out west.
Indeed. And to take care as we wait out today's ice and adverse weather in this region. Mary, we appreciate it, and we'll talk again next Friday.
Thanks, Eric.
At the Weather Data Library here at K-State, that's climatologist Mary Knapp. That'll cap off our Friday edition. Thanks, as always, to you for tuning in. Eric Atkinson here for Agriculture Today. This is the K-State Radio Network.